So welcome everybody to REIT Industry Day at NYU. This, I believe, is the third or fourth panel today on social infrastructure, specifically talking about affordable housing, education, and REITs. Really excited to have these panelists here. I want to introduce myself first. My name is Professor Kwatinetz. I'm the director of the NYU Urban Lab. The Urban Lab is dedicated to impact real estate development, primarily in cities, but also in small communities that people might not call cities, rural areas. We focus on inclusive growth, including housing and economic development, sustainable infrastructure, and also public-private partnerships and different forms of impact capital formation, which could include ESG or double bottom line or designated bonds, things of that nature. We specifically think about inclusive growth in the form of what was been called the quadruple bottom line, or integrated local area development. It's an old UN framework that predates the UN SDGs that talks about thinking about things in terms of economic prosperity, social equity, environmental sustainability, and cultural vitality. Very relevant for us today. In order to introduce the topic of social infrastructure, there's certainly a lot of discussion about equity in the form of talking about affordable housing. I would say that is increasingly the topic of the day in a lot of policy circles. But when we think about why affordable housing is so important, really it's about how a household makes a life for themselves and their family. And housing is just one portion of that. Here we show a step chart of the different things that might be in what we call a basket of goods of a household, the things that they need to spend. They have a certain household income level. Here we're showing someone in Reno, Nevada, a household that's making 80% of the area median income. They're making $77,000 a year. And then what they need to spend money on: housing at 30% of their income, because this is rent regulated housing. And then they have to spend on transportation, medical, food, entertainment, et cetera, et cetera. It turns out that this particular family, even getting their 30% subsidized housing, will go in debt almost $16,000 a year by the time they spend everything that they're supposed to spend. So we really use this to ask the question, is 30% the right number, first of all? And second of all, the answer to the affordable housing crisis isn't only building more housing. It's also trying to figure out ways we can lower the cost of other things to make this more possible. And today, we'll be talking about housing, but also talking about education. And I have a particular passion for daycare, which is why it started. No, it's not why it started. There's actually supposed to be a source down here about where that came from, but you notice that's also a very large input. So I think this gives us a window into the social infrastructure conversation. Here are four components we could talk of as social infrastructure here that could be financed: housing, transportation, medical, and daycare. This is example list. It assumes that this person is living in a public school district and their education is paid for in that way, but we'll get into that conversation with Alan here. So why do we need this social infrastructure? Well, this really helps us stabilize the overall economy and the social contract of living in a city, living in a place where there is governance. The idea is that where there are certain things that everyone deserves to have according to the government or the social contract, we'll loosely call those public goods, even though that isn't the right exact definition. But the public sector can focus on reducing this overall cost of the basket of goods of a household by doing things like creating a universal pre-K, or making medical costs cheaper, or making housing cheaper. And those things are really important to the functioning of a society that has stratified incomes. In education, I'm really going to let Alan dig more into this one, but we do think that education is absolutely critical, not only for future outcome in terms of people moving their social status, but also day-to-day well-being of individuals and communities, and promoting social mobility, reducing inequality, and actually also improving health. Alan, we have here as an expert, and we'll talk a lot more about that. Healthcare is another form of social infrastructure that's extremely important. While we don't have someone representing healthcare here today, if you have questions about that, we're happy to address those. And then affordable housing, where we will dig in, especially with Aaron and Catherine here, to talk about some of those outcomes that we get from that. Culture is one of my personal favorites, is what actually got me into real estate, fighting for the preservation of culture in different communities. Culture goes far beyond just talking about art. Usually we think of it as how a community defines itself as a community. It could be heritage, it could be shared struggle, it could be all sorts of different things. But we, again, have research showing that participation in culture and access to culture are both things that vastly enhance equitable outcomes as well as health outcomes in communities. And then we have our general category of community services, libraries, parks, senior centers, et cetera. So I really want to thank, before we get moving forward, my two graduate researchers that are working on this project. They're here in the background taking notes and supporting the panel, Maya and Lindsay. Thank you very, very much. They also pretty much made this presentation that I get to give, so I want to shout them out for that. It's beautiful and it's all them. And then finally, I want to turn to introducing our panelists. So the way we're going to do this is I'm going to let each panelist give an opening statement as a means of introduction. I name check them at the beginning, and we'll have each one talk a little bit. There might even be some multimedia content if we could figure it out. And then after that, we'll get into our questions. We have some prepared questions. And if you, our audience members, have questions, I'd love you to go down and click your Q&A button and put those questions in, and we will collect those. And when we get to a certain point through the panel, we'll turn to some of those questions as well. So we're really looking forward to this panel. We have great panelists here. And to kick it off, I want to introduce Aaron Potter, VP of ESG at UMH Properties. I'm going to stop my share for you, Aaron.
Okay, thank you. Hi, everybody. Aaron Potter here, and I would like to first start off with a video on UMH Properties and then get more into myself and the company.
I don't think we're hearing the sound.
Oh, you're not hearing the sound?
I was not. I don't know if others could hear it.
Oh, 1 second.
Hello, and let us introduce.
I hear it now.
Oh, you can hear it now?
Yeah.
Okay. Reshare, sorry about that.
To manufactured home communities operated by UMH Properties. UMH Properties, Inc. has a 53-year history of providing quality, affordable housing for our nation's workforce. UMH owns and operates a portfolio of manufactured home communities consisting of 130 communities with 24,400 developed home sites situated in 11 states with an 86% occupancy rate. At UMH Properties, we are satisfying the fundamental need for quality, affordable housing. As home prices continue to rise and available home inventory continues to shrink, the supply of affordable housing becomes an ever-increasing concern. Our residents are truly a part of a community with friendly, caring neighbors who share amenities like swimming pools, playgrounds, and clubhouses together. Sense of belonging is among the most frequent responses about why residents enjoy living in a manufactured housing community. UMH communities are known as land lease communities. A land lease community is a housing development where a resident owns or rents a home and leases the lot underneath the home from the landowner. Manufactured homes offer all of the same amenities as a site-built home and can feature high-quality appliances and customizable interior features. Manufactured housing is one of the most affordable options for renting and or owning a home. UMH Community's average home sale price is $73,000. With an average rental cost of $880 per month, we are committed to being a part of the solution to America's affordable housing crisis. UMH has long believed that we have an obligation to create sustainable and environmentally friendly communities that have a positive societal impact. We build, upgrade, and manage manage well-maintained communities that our residents are proud to call home. We believe in enriching the lives of the people impacted by our community, our residents, and our neighbors.
Okay, so as you guys can see, we are UMH Properties. We're a manufactured housing REIT, real estate investment trust, listed on the New York Stock Exchange as UMH. I've been at the company for 5 years, but the company has been in existence for 55 years and started by our founder, Eugene Landy, who's still as vibrant as can be and in office as much as possible. We have a little bit more communities than that video stated. At the moment, we have about 135 communities, 25,700 sites. But we also have communities in a joint venture with Nuveen Real Estate, the Teachers Pension Fund, as well as we started our own Opportunity Zone Fund, which contains 2 properties, one in South Carolina and one in development in Georgia. As the video stated, we are able to access a critical social need in the form of affordable housing. And we do that through manufactured housing, which is HUD code housing built in factories. These HUD code homes are built to the only federally mandated building code in the country. And with that being said, there's quite a few different benefits that the factories can rely on, which include economies of scale and recycling initiatives, which help to not only benefit from the social aspects, but also the environmental aspects of recycling and precise ordering, no toxic runoff. And there's also, some data that shows that there's less carbon emissions, being that the homes, that the workers only have to go to one site instead of back and forth to, different, lumber yards and metal sites and so on to, get the supplies. So UMH sits at a great crossroad where we can impact both the environmental and social side of the housing market. And as the VP of ESG, I try to help explain that that narrative to the broader markets and to our investors as well.
Fantastic. Thank you, Aaron. It's really great to have you here. I didn't realize that UMH had been around for 55 years. It's quite a track record. Looking forward to talking more about that. So next up, I'd like to introduce Alan Washington, President and CEO of Charter Schools Development Corporation.
Well, good afternoon, everyone. And thank you, Matt, for moderating the panel. And thank you to your graduate student research team for managing the logistics behind the scenes. I know it's a lot of work and appreciate both of you there. I'm Alan Washington. I am a proud alumnus of NYU Schack, and I am the CEO of Charter Schools Development Corporation, also known as CSDC. At CSDC, we eliminate barriers to educational access, choice, and equity for underserved communities nationwide. And we do this by empowering mission-driven organizations that make up what we call the educational ecosystem of a community to finance, develop, and ultimately own their own real estate. Our vision is that one day every community has the facilities needed to create a flourishing educational ecosystem. And we too have a short video that, Matt, if you could cue up, that would be great to tell a little bit more about us.
I'm going to do my best. Let's see.
Thank you.
Here we go.
Charter Schools Development Corporation. For over 25 years, we've been trailblazers in championing public school choice. We eliminate obstacles to affordable, top-notch facilities to help educational equity flourish. We provide complete facility solutions, from real estate strategy to development and financing. As a nonprofit developer, we strive to pass on cost savings to our schools through lower rents, flexible lending terms, and affordable purchase options. We give our school partners a pathway to ownership and the power to shape their educational environment, drive financial sustainability, and inspire the next generation of leaders. We have leveraged over $750 million in private capital to a difference in underserved communities. CSDC is the largest grant recipient under the Federal Credit Enhancement Program. As a trusted partner, our extensive reach has allowed us to serve 220 schools across 30 states and the District of Columbia, 100,000 student seats. Impact is our priority at CSDC. We are committed to empowering access, choice, and equity, one facility at a time.
Thanks so much. I just want to say excited to be here with Catherine and Aaron. So back to you.
Great. Thank you so much. Great video. And next, pleased to introduce Catherine Buell, who is former director of Amazon's Housing Equity Fund.
All right, good afternoon, everybody, and I will start sharing my screen. Bear with me while I get my presentation up and running. So my name is Catherine Buell, and I am the former director for Amazon's Housing Equity Fund. And just to introduce myself, I've had a fun background in community development, and in coming to the affordable housing space and the Amazon platform from very different stage in both Aaron and Alan. My background, I used to be the CEO of the Atlanta Housing Authority. I also ran a large redevelopment project in Washington, D.C. called St. Elizabeth's. I am a nosy busybody in my free time and worked on community advocacy and marketing campaigns, and landed at Amazon a few years ago as Amazon was thinking through its affordable housing strategy and planned to do something in affordable housing. Within 3 years, we have launched the Amazon Housing Equity Fund. And I just want to talk briefly about what the Amazon Housing Equity Fund is, what we learned, and I'll give you a little bit of my behind the scenes look at how we created and stood up a $3 billion platform to invest in affordable housing across 3 different markets. But ultimately, the Amazon Housing Equity Fund was our vehicle to be able to provide gap financing to affordable housing projects across the country in 3 different regions and markets. First, in the DC market, Arlington, Virginia, where we were expanding our headquarters, Nashville, Tennessee, and then in Seattle, Washington. Amazon committed over $2 billion to creating a capital fund, plus additional grant and marquee investment dollars to the tune of close to $400 million in our first investment. Ultimately, the fund is on track to create and preserve over 20,000 affordable housing units. And we've done it in a innovative way, investing over $300 million in transit partnerships, $21 million in a minority developer accelerator program to really spur the market and increase the amount of affordable housing. So just to talk a little bit today about what did we learn from that wild ride. And I will share the video so you can see a little bit about the behind the scenes, but what do you need to actually scale community innovation from a new player in this space? There are builders in this space. As you can see from Aaron, there are developers who will specialize in unique niche areas like education. Matt brought up healthcare is another area where we're seeing a lot of growth. But we decided that we were going to really approach things in 3 different ways. One, start with a data-informed strategy. Looking at the data in our local markets, what we found is that preservation of existing affordability was a major issue. Most of the markets were losing affordability as quickly as they were, actually at twice the rate as they were able to build it. And so we went in and made sure that we were going to be able to preserve existing assets and resources and provide quick strike funding to help nonprofits acquire property. We invested in non-traditional partnerships, equity minority developers as well. And one of the things that we noticed is that creating and having a supportive enabling environment was critical to our success. So once we created our framework and our approach, we then looked externally to see how we were going to execute. And 3 things that we learned were really important. Government partnership was critical to our success. The capacity of local partners, on the ground partners, was really critical. Having people that we could implement through very quickly. And being able to develop hyper-local scalable solutions, meaning that one size fits all approach does not work, as many of us know, to addressing affordable housing challenges in our markets and making sure that we have unique approaches. And then finally, having organizational support. I feel like I was lucky in the fact that I got to stand up a new community innovative giving program in a tech firm. But having those scalable operations is really critical. We are a new player in this space. When I started this, we had a team of 2, and when I left, we had a team of 12, 9 of which were dedicated to affordable housing to deploy $3 billion. And so making sure that you have, even if you have a small team, that you have scalable capabilities, industry expertise, and most importantly, a willingness to take risk in new areas. So there's going to be a lot to talk about today, but with that being said, I will close with a brief video of my journey, and hopefully you'll be able to see this. And let me know, Matt, if you can hear it.
Will do. Not yet.
Can you hear it?
Are you
Yes.
trying it in your browser?
Let's see.
If you drop me the link in the chat, I can also put it up there.
All right. I will drop in the link.
Okay.
That's okay. We can't hear the video.
Oh, really?
Yeah.
Oh, I thought it was going so well. Let me try one more time because we all got a chance and we're doing fine on time. Can you hear it now?
No. What I can do, I can drop a more general video in the chat for everybody.
I love that video. I wish you all could hear it. The music's great. And it's very impactful. So I'll give you a second to drop that in the chat. And we're going to open this up now. We have some prepared questions. There are 42 of you in the audience, so I'm hoping that you might have some questions too. You can just go down into the Q&A feature and drop your questions in there. We'll be tracking those, and we'll be able to ask those when we get further in the panel. To start with, I got to say what I thought social infrastructure was. That wasn't very fair because I had the mic and could dominate the conversation. So I'd love to now turn to each of the panelists and ask you, what does social infrastructure mean to you? And how does financing social infrastructure in general or in your particular area have the potential to increase equity in communities? So what does the social infrastructure mean? How does it have the potential to increase equity? Does anybody want to start?
I don't mind starting.
Thank you, Aaron.
Yeah, so to me, social infrastructure is almost basic fundamental infrastructure. And, that is that's the policies, the regulations, as well as the traditional way you think about infrastructure as housing and education, utilities and healthcare, to actually have a society that, is properly functioning and can grow and thrive. And, these types of things are the backbone of what you give, people a sense of belonging. I'm gonna pass that on to whoever's
Yeah.
next.
I would echo that. One of the things that we sometimes overlook, it's not just housing, it's not just one thing, it's not just the schools that are able to be built, but it's also about how all of that community, all of that infrastructure comes together to be able to support the community. And Matt, you pointed to a lot of challenges. Affordability challenges are real challenges for a lot of community, but sometimes it's also food access. Sometimes it's also access to safe streets where you feel like your kids can walk out safely. So it really does entail a number of different factors, and all of the social infrastructure is going to be different depending on the community that you're working in.
I think that that's well said. I see social infrastructure from the lens of an educational ecosystem, is how we like to call it at CSDC. And for us, what we mean by an educational ecosystem is the collaborative network of the educational institutions, the organizations, the community partners that work together to create a holistic environment for students and families and educators. Now, when we think of the word education, we think of a school facility or a school building, which is at the core of any community or educational ecosystem. But we believe in this ecosystem that is greater than that, that also includes some of the things we just discussed that help to address non-academic needs of students, such as healthcare, clinics, childcare facilities, early childhood education programs, mental health services, food, teacher housing. And on the comment about teacher housing, we'll get into the affordable housing later on today in the panel discussion, but we believe that teacher housing is a vital component of the educational ecosystem, because when you provide teachers with access to housing options that are specifically in the neighborhoods where they teach, there is data that shows that there's greater retention, and then it ultimately has a greater impact on the communities that they are serving. So bringing all of these pieces together, the institutions, the community organizations, the support services, we all look at that as what we call the educational ecosystem.
Really good stuff. I do want to take a slight detour just on the teacher housing question. I know that in New York City, for example, when I was working for the Economic Development Corporation here a few years back, we looked at doing worker-specific types of housing, looking at trying to do for teachers in particular. There had been a great project in Newark where they had done, I think it was called Teachers Village or something like that, where there had been some schools as well as teacher housing. We were looking at doing some of that for artists, for police, for firefighters, and there actually were discrimination codes against doing that here in New York City. There was a lot to try to overcome. I'm curious if Catherine in Atlanta or Aaron in some of your markets, you've seen some of this workforce targeting for particular communities, and whose responsibility is that social infrastructure? Is it the employer or the city or the community? Because what does it do to our communities when, I really like the point Alan made, what does it do to our communities when teachers and people who work there can't live in those communities, and how do we address it?
It's interesting. It's such a great question. One of the things when I ran the Atlanta Housing Authority, the Housing Authority was quietly supporting 10% of the rental market in the city of Atlanta, behind the scenes through private landlords. And really, I saw it as a way that we were supporting Atlanta's workforce. The Housing Authority has a work requirement. And what that means is that if you actually pulled the records, you would find that most of our employees worked at the airport, worked for the government, worked for major corporate employers, but just did not earn enough income to be able to stay in the city of Atlanta. And we were able to subsidize that. what does that tell us about who's actually living in the properties? And Atlanta was a really great example. We actually modified our wait list to be able to provide preferences for local residents. A lot of that was practical because you weren't going to live in Atlanta if you weren't going to come to Atlanta if you had to come from Chicago or some other place, but also because it was a fairness issue. If you are a local jurisdiction and you want to be able to, we talk about housing and these social constructs as something that is general and a good thing to do, but it does support our local economies. It does allow our cities to be able to prosper. And so one of the things that we did, taking an example from San Francisco, is we provided an anti-displacement preference for those moving into our housing for residents who lived in the local community. That meant local city residents in the city of Atlanta, in that example, were able to move into our affordable properties first. And what I've seen is that other jurisdictions have taken the same approach, really because the infrastructure, the housing infrastructure, is so critical to a city's growth.
Great comments. Aaron?
Yeah. And for what we do see, you know, that in our communities that we are able to house local policemen, local firefighters, local teachers, and we also see, and a great example has been in Nashville, where we've been able to you know, increase the amount of rental units that we have, as well as the homes for sale that we have. And in those areas, we've seen a great boom that has come, and that a lot more of economic development has followed. You know, our placement of newer and more quality manufactured homes and giving people the ability to actually live there. This has seen, you know, more businesses, you know, come up and actually not only stay but thrive. And I've actually wrote about this on a paper that I wrote on the critical need for affordable housing, and that there's a big spatial mismatch between where the actually economic employment is and where the employees would live. And, you know, when that separation is greater, that actually, you know, has a disastrous effect on the local economies, as we kind of just spoke about, you know, having people, you know, if they are spending outsized portions of their income on housing to live closer, they may not have, you know, as much needed to get to, you know, proper schools or pay for transportation or food and other things like, you know, other necessities that are needed to, you know, have a sustainable life. So do see that, you know, that there is a great importance on actually being able to have the housing that is critical to America's workforce, and that's our target population.
That's great. And which I noticed that you have a few different communities there in Nashville, Shady Hills, Trailmont, Holiday Village. Is one of those a link that I should drop in for people to look at?
Yeah, actually all three of those are pretty much right around in the same general area. Yeah, those are we've had seen right next to a Holiday Village, another New York Stock Exchange company come in and set up operations across the street. We have seen apartment developers come in and start to build high rises, not necessarily high rise as you would expect in New York City, but you know, multi-story apartment buildings and multi-family buildings, and just seeing that, you know, there's a big need for the housing in those areas. And when we came in, there wasn't nothing as much as there is there today, but, you know, that just goes to show that in order to build up the community, there needs to be a place that employees and workers can live at an affordable rate. And that's our main goal, is to be able to provide these people with housing that they can come home, feel safe, and enjoy.
Excellent, thank you. And we did have one question from the audience in response to this discussion. How do you mitigate specific workforce housing from segregating that workforce from the greater community? Does anyone want to try to take that?
Location.
Yeah.
Yeah, we didn't, you know, in our case, where it's not, you know, marketing towards a specific workforce in terms of, okay, we just want police to live here, or we just want teachers to live here, but, you know, trying to set up a community that, you know, people feel comfortable in, and it actually, you know, the best type of marketing is word of mouth marketing. So if we are able to get one police officer in there, he may go and tell somebody from, you know, his regiment that, hey, you know, I live in, you know, Holiday Village, it's safe, you know, I feel comfortable there, my children have a great time, you know, using the common facilities. And, you know, same thing could go for a teacher. So they're not necessarily trying to, spread specific, group of workforce, but just have workforce housing that's affordable and safe.
Excellent, thank you. Aaron, I know UMH is really unique. You've said it a few different times, but just for the interest of making sure everyone gets it, it seems like we have a country that's really suffering under the inability to produce affordable housing fast enough. And we can argue about what the reasons for that are. I know in New York City, if you're going to work with the local housing agency, HPD, if they like your project, it could take up to 6 years to finance it as of today. And we have, I think, a 998,000 unit deficit today. So we're really looking at a 50 to 65 years at current production rates, assuming we lose no units, no one new moves to New York. It would take 50 to 65 years just to deal with the existing rent burden today. Obviously, we need to speed it up, and some of that speed up might be finding ways to add to what the government is doing. What the government is doing can be really great. I'm not trying to take something away from that, but how is UMH able to produce working class and affordable housing without government subsidy? Because I feel like that's a fairly unique situation. Although I welcome Catherine piling on. I'll ask her next about Amazon Fund, but why don't we start with you, Aaron?
Yeah, we don't use traditional subsidies that are used to build affordable housing, like the low income housing tax credits. What we use is manufactured housing, so prefab housing that's built in a factory. This type of production is actually able to decrease timelines as well as increase the production in a way that is able for us to get a home in on time and rent that out. Our communities are spread out throughout the United States, mostly in the East Coast and now in the South, but without the use of traditional government subsidies and through factory built housing that is built at typically half the cost per square foot of a traditional site built house, that decreases our costs. We also buy value add communities that are typically run down, that have low of high vacancies, and would take a long turnaround for most developers. But the fact that we are a real estate investment trust, being that we are able to access capital markets and public markets for financing, as well as due to distribution of our dividends, not have to pay any income tax on our revenues, on our profits, then we were able to, combine both the structure of UMH as well as our ability to buy this product that is a quality product, but is built in a faster time frame and at a cheaper cost. And when you combine that together, we're able to provide our residents with cost savings.
Really interesting model, and something I know a lot of our audience is going to be anxious to learn more about. We dropped a bunch of links in the chat here. And speaking about interesting models and doing things differently, Catherine, I want to turn it to you, and maybe you can describe the Housing Equity Fund. You did a little bit at the beginning, but just talking about what is unique about the structure and why Amazon approached housing in that fashion versus other methods. I know you spoke in our pre-panel about how other corporations do it versus what you selected to do. Maybe you can put some details around that.
Yeah. So rather than going at affordable housing through intermediaries, meaning a lot of affordable housing investors, philanthropic organizations will go to an enterprise community development list because they have a national footprint or partnering with their local government through many of the traditional organizations, and agencies that work on housing. We decided that we were going to go into housing directly by identifying project sponsors who really needed gap funding. And we leveraged the Treasury Department, our Treasury Department within Amazon's corporation, to be able to provide low cost debt and in some instances, grant funds. What we found is that our capital structure in terms of how we invest our money was on average $100,000 per unit, was different. The funding sources and the financing per deal varied. It ranged from Fannie and Freddie debt to low-income housing tax credit funding to even projects that had no public sourced funding to be able to either preserve or create the affordable housing. By being able to go directly into project sponsors and to be able to work directly with players working at the market, we were able to scale very quickly. And I jokingly said to Aaron before that location matters. By going directly to partners, we were able to pay attention to where our properties were located and not just put affordability in places where it typically is located. We were able to locate affordability in places like a block in Crystal House. It's a block away from our headquarters that we're expanding in Arlington, Virginia, literally a block away. There are 3 metro stations within walking distance, beautiful, large family style units, larger 1-bedrooms and 2-bedroom units, and in a great neighborhood that is growing. And so our ability to go in directly and to say it's really important to have affordability here made a huge difference in terms of where we're able to locate. The last thing I will add is that we also, because of the partnership with transit agencies, we've been able to locate affordability near and next to growing transit stations. And that's really important. So when I say location, making sure that you're able to push the envelope on where that affordability is located is something that we were successful in doing.
If I could ask a question to you, Catherine. So in that model, were there opportunities or pathways to ownership in any of the projects that you guys did, or was it mostly rental, or what did that look like?
Yeah. We started out with a small home ownership investment. And as you can imagine, home ownership is a challenge because investors and philanthropic investors like us really wanted to be able to see long-term ownership. We did not want to see 10, 20-year periods of affordability. And so 2 different things. 1, there are home ownership initiatives coming up that I cannot disclose, but 2, we did start in Nashville. Nashville raised their property taxes in the middle of COVID by, I want to say 34%, because they just did not have enough money to support their local government. The next year, they went back and reassessed property values, which meant that some residents were seeing a 50% increase in their property taxes. So we established a resiliency fund through a local nonprofit to be able to pay the difference in taxes. And what we found is that keeping that homeowner in their home was more effective than us being able to provide down payment assistance. So again, coming in with GAP, in that case, grant funding to be able to sustain home ownership. And looking at different models like community land trusts or other models that allow for longer term home ownership. And most importantly, allow a company like Amazon tech player who's new in the space to play around with different models that governments may not be able to use their funding to support. We can take more risk, we can push the envelope more in terms of where people are located. Teacher housing is a big one, so it's not a surprise. Most school districts want their teachers living near the schools. It benefits everybody. And so really thinking through what are those resources that we can all bring to the table to help increase long-term affordability on the home ownership side.
Well, later, I'd love to hear more about Nashville. We've done a lot of work in Nashville, and so have a lot of students and educational ecosystems that we're supporting down there, and so it'd be great to learn some more about that. So
yeah. Well, for those who are listening, Nashville is a fascinating place. It is the fastest growing multifamily market in the country. It is changing overnight. And when you drive through neighborhoods like East Nashville and North Nashville, there are now these tall and skinnies where they're tearing down a lot of smaller style homes and building $1 million tall and skinnies, which have beautiful views of downtown. And it changes, it really does change the city. So having an increased focus on home ownership, even in places like Nashville that are growing, is really important.
So Alan, I'd like to turn to you, and we've gotten such a great background of both the way that affordable housing has been an issue and some of the innovative mechanisms that have emerged to try to deal with those issues, whether they're 55 years old and still impactful and innovative in the case of UMH, or just this surge of involvement from a corporate citizen and really looking at innovation in the model. You're going to have to carry the water of 2 people. and talk a little bit about what you've seen, work historically in the past for school financing, and then why that hit an issue that led to the creation of what you do, and kind of where you see that going in the next 5 years. What do you see the future of the financing of schools looking like from your perspective?
Sure. So I'll break this down into two buckets. So the first bucket is the world of charter schools, and charter schools are driven by state legislation. So each state has a different sort of approach to charter schools. And within each state, there are pathways to receive facilities funding for charters to be able to have their own permanent homes. But what we have found, and what many people will tell you, is that assistance doesn't cover everything initially, particularly for a new startup school. And so we, for the last 25 years, have been at the forefront of leveraging public dollars through various programs, which I'll get to in a moment, to be able to support those early stage schools get off the ground and ultimately own their own facilities. And so the programs that are available at a federal level to help in that area are known as federal enhancement grants that CDFIs, of which we are one of them, are eligible for. And I'll talk a little bit more about that in a bit. So we have sort of leveraged the money that we've received as a CDFI to be able to finance projects throughout the country to help these charter schools get off the ground. And I think that will continue as we move forward. But as we think about the larger educational ecosystem and sort of looking ahead to for the next 5 years, I would love the financing of educational ecosystems to be at the forefront of social infrastructure conversations, because I think that there is much more beyond just sort of schools that are going to be needed in communities to help to make these educational ecosystems flourish and thrive. And one of the things that I would love to see is the capital markets evolving to having a little bit more rigor and expertise around the education sector in particular, so that we can go beyond sort of what we've been doing so far to date.
Super interesting. And you're mentioning CDFIs. I noticed you're part of the Opportunity Finance Network, which is a group of people involved in capital, institutions involving in deploying capital that have social purpose as well, sometimes in partnership with the government, sometimes on their own, maybe using ESG funds. This is kind of a theme that I think runs through all of the work we're talking about here, this idea of public-private partnerships, whether very explicit in the case where there's actually linked money coming from the government, but a process that might be led by a private and innovative process, or even using the standards of the government, as you're doing with UMH, to try to arrive at what is appropriate in terms of delivering social infrastructure. So my question is, how have you seen the public-private partnerships play a role in your work? And we'll start again with you, Alan, if that's okay.
Sure.
And do you see the role growing or shrinking? What would be the biggest policy change or aid that could increase that type of delivery mechanism? You said people becoming more expert at what is being delivered. Are there actual policy changes that could happen, or changes in legislation of some sort that would aid that?
Sure. So to answer your first part of your question, public-private partnerships have absolutely played a role in our work. And as I mentioned, being a CDFI, we have been able to be the recipient of federal enhancement grants. Now, we have received 9 of those federal enhancement grants, totaling $70 million. And that's important because we are the largest grant recipient under the program by both dollar amount as well as individual awards. What we have done with this capital is we've been able to leverage this to leverage about $750 million in private sector financing. And so that partnership between having funds that are available at a federal level through a conduit like CSDC, and then being able to go out to the capital markets and leveraging private capital to be able to have an impact is a model that we continue to be bullish on and think that will continue moving forward. I think one of the things that would be great is that, like these federal level grants that exist, I'd like to see more of it on a state level, so that more capital can be deployed locally at a local level, and having more access to capital there, I think would be something that would be great, and something that we are advocating for.
That actually follows the model of what happened with public housing, then affordable housing, and then local control state agencies. So it wouldn't be shocking to see that happen. It's not out of the norm. We just need to see people prioritize it, right?
We just have to make it happen. Exactly.
Yeah, exactly. Aaron, what about you? Could you see, I know most of your stuff, maybe even all of your stuff is done without public subsidy, but can you see a role where public-private could enhance not change the strategy that you're doing, but enhance where you're going, or enable you to access different areas or different product that you can't do today?
Yeah, like I said, we don't technically use traditional government subsidies like low-income housing tax credits and so on, but we have been able to partner with Freddie Mac and Fannie to, create, low-cost mortgages on our communities, and also, which was one of the first times that they've done that, as well as do it on our rental units. So we have been able to partner with them to, get low-cost financing in that type of sense. But one thing that, there needs to be a better public-private partnership, at least in the manufactured housing arena, is for more of creating a secondary industry in terms of where mortgages can be bundled and sold together. Since these are chattel loans, there's not as much incentive for banks to actually give out these chattel financing loans to people that are buying the manufactured homes in communities, and this is actually hurting them from realizing some of that cost savings that they would have realized if the financing rates were low. So what we've done in our community is be able to provide our own financing for homeowners, which is in the bottom quartile of chattel loans across the industry, because we aren't as fearful that we will, if somebody defaults on their loan, or what we're going to do with the house, since we have expertise on selling and renting homes in our communities. So if there was a better private-public partnership between the access to financing for manufactured homes, there would be a greater boom in the actual building of communities.
Excellent. Catherine?
Yeah, absolutely. I will just add to both what Alan and Aaron said. Public-private partnerships for us is critical. Not just having the public lay the groundwork. The public has so much, local governments, state governments, federal governments have so much control over what happens, but also thinking outside of the box. Most people don't think about schools as being partners in affordable housing, and schools are partners. Schools own land, schools have the demand, schools are closely linked with where we live. For us, it was transit agencies. Most people don't think about transit agencies as potential partner in affordable housing, which led to our ability to help make sure that we're building affordable housing at transit stations. Transit stations have some of the most valuable land in most local jurisdictions. And so thinking outside of the box about who are those players that you can bring to the table. The last thing I'll mention is that those public-private partnerships, they're not only essential, but they allow you to go further faster. And what we found is that our ability to move and operate in areas where governments really were at the table, they were thinking outside of the box, they were being creative about the land, the resources, maybe even some permitting expeditions and tax support, relief support. What are those things that you can bring to the table to actually support affordable housing? Made all of the work that we're doing even more possible when you have strong government partners at the table.
Time goes so fast.
I'll just add one other thing onto that bit of the conversation.
please,
The other thing that we've found too is that the public-private partnerships are also very attractive to our private capital partners, right? No one wants to come to a project and be the only source of capital being brought to the table, or having all of their skin in the game and nothing else. And so why I'm very positive in my outlook on the future of public-private partnerships is because I think that's going to continue to be necessary in order to get some monumental projects completed. So.
Well, I really appreciate that statement, especially because my public-private partnership class is in the audience, and we have to convince them that it's worthwhile for them to pay attention. So we are wrapping up here. I want to give each of you a chance to make a little bit of a closing statement if you'd like, or if you prefer to lob a question that you've been wondering at one of the other panelists. It doesn't have to be it doesn't have to follow immediately from the conversation, but just to give you one more bite at the apple, as we say, of this panel, I'm interested in where you're at the end of the panel.
Yeah, I'm happy to jump in here. I hope that my sharing my remarks and I'm talking about how through a platform like Amazon that we were able to have such a large impact really does show how creativity and innovation in the affordable housing space works. I didn't have a traditional career going into community development. I'm an attorney by trade, but coming in, listening to experts, and really, quite frankly, being able to think outside the box is what's going to make it work. And so hopefully folks walk away today with not just a continued understanding of different models for housing affordability, but also an understanding that you can take some new approaches, working with schools, working with manufactured housing and other building types to really be able to push the envelope. And some of the solutions, quite frankly, just don't exist right now, but they can exist and have an impact in less time than I think most of us realize. And so encourage that there are so many people who want to learn more about community investment in different models, but do know that some of the models have yet to be created.
And to follow up on that, I think that's what makes this space so exciting. So since we've got some students that are listening, on this panel and thinking about careers and thinking about next steps for them, what Catherine said is so spot on, that not all of the solutions have been created or thought of. And we need people to join us all in this effort to think about those creative solutions so that ultimately we can have more impact and ultimately we can be a better society.
Yeah, I agree that this is something that, is going to take, the partnership of people that are building schools, people that are building housing, and people that are, doing healthcare and so on to bring up, this social infrastructure in a way that is beneficial to all within the community and within the surrounding community. We believe at UMH that it's going to take a lot of capital to build this types of affordable housing, and that working with the governments and other institutions like Amazon and like charter schools and others to think of the innovative ways to come up with this capital is going to be important. And once we are able to come up with that capital, the other thing that's going to be important is to have a long-term mindset. As you were saying, in New York, it may take 56 years. Hopefully it doesn't take so long to, do some of the things, but it's important to actually, have long-term patient capital, and a lot of it to actually come up and reach our goals. And ability, what we do, and we're turning around communities, we don't see the turnaround till, communities are about 80 to 85% occupied, and that could take, up to 3 to 5 years to get to that point. And having long-term patient capital that sees beyond just, immediate returns, and sees that, okay, we're looking at, the return in 12, 10, 15 years from now, you will see the value appreciation go up. I know one of the questions was around equity as well. Somebody that owns their manufactured home can build equity. And as we continue to upgrade the community and the surrounding area of the community, the free and shared areas, that will actually bring up the value of the person's home. So if they were renting a 1,200 square foot apartment, they would never see any equity return. While if they're in a community that's continuing to upgrade, as we all just also echo that, there's places like Nashville, which are, up and coming, and in that surrounding real estate is becoming more, more desired, that those people could sell their houses for an increased value, or at least, maintain the value in their home. And that's something that, we like to stress to as a narrative for UMH, for manufactured housing, and for overall community building.
Well, this has been such a great panel. I really appreciate all of your time in joining us. This is hopefully the beginning of a conversation that continues at NYU Schack, as well as I know it is happening in other places as well. We will be writing up a little bit of summary about what happened here. It probably will appear as an article in our student magazine, Blueprint. Maya's writing that up, so we're excited to see that. But I just want to thank you, Aaron, thank you, Alan, thank you, Catherine, for joining us. This has been a truly educational and interesting panel, and I look forward to keeping in touch with all of you. Thank you for your time.
Thank you. Enjoy the rest of the day, everybody.
Thank you.
Everyone.